Hello guys, and welcome to my YouTube channel once again. In this video I want to show you one easy way that you can use to catch multiple spikes in the market, and you can also use the same approach to scalp the market for hours. So all you need to do is to watch this video to the end, guys, and subscribe to this channel if you've not done that yet, and like this video, because what you're going to get here is powerful, guys. Please stay tuned as I explain it. All right, so first of all, you need to come to a higher time frame to look at the direction of the market and also mark out key levels. If you've been watching my videos, you'll notice that that's what I do. I go to the higher time frame first of all to mark out my key levels, then try to join trend lines and then determine the direction of the market, the next movement of the market. So first of all, I will have to put my key levels by marking this one right here. Now, you know why I'm placing this horizontal line right here. That's where I found my first key level. Why? Because market has been selling and buying around that region. If you do not understand, here's what I mean. Let me get this object so I can you can see market sold from here, market also bought from here, market also sold from here, stuff like that. And maybe I should use the arrow line tool so that I can show you well. All right, so you can see market bought from here, market sold from here, bought from here, sold from here. So this is actually a key level. You can see market also bought from here, guys. Market also bought from there. So that's why I placed that line there, that horizontal line. So I'll duplicate it and place it somewhere else. I notice there is a that it's a key level. So I can see there's another key level around here. There's another key level around this point where you can see market bought and sold. Just look at the trend line, look at it closely. You see that some market bought and sold around that same level too. And if you let me duplicate this and place it right here, you can see there's another key level here. There's another key level somewhere here. Yes, market bought and sold around this level also. You can see this let me get the arrow line too. You can see market bought from here, bought from here, bought from here, bought from here, sold from here, sold again from here, and also sold from here. Then it's selling again from here currently. So that's actually a key level in the market. So there was market has been in a downtrend. If you look at it, you see that market has been creating series of lower highs and lower lows, and it is currently retesting this breakout, because there was a breakout here there was a breakout from this key level. Then it retested, it came back and it's retesting, and I'm expecting the market to go back to create another lower high. This is a lower low. I'm expecting the market to still go back to create another lower high, and we can determine predict where the next lower high is going to be by using the Fibonacci tool, Fibonacci retracement tool. So if I bring the Fibonacci retracement tool, put it right here from the last swing high to the last swing low, then we can see that the market would possibly be reversing on getting to this particular level here, this 61.8, because we have a key level right here. So the market might be reversing on buying to this place. It will start spiking massively again. All right, so until then, because this is not going to happen tomorrow, it might take about the next 3 to 4 or 5 days, or the next 1 week before the market gets back to this particular zone here. All right, so I remove this Fibonacci tool. Then after marking out these key levels, guys, the next thing is to try to join see if we can join some trend lines, guys. All right, so let me get my trend line tool, then I'll pull some kind of trend line like here. Let's see if we can join some trend lines, some points, swing points, to form our trend line. And as you can see, that's what we do now. And each time market got to the trend line, you can see it has always been changing its direction. It has always been changing its direction or reversing on getting to the trend line. And each time market, notice is that each time market gets to this swing, to this trend line, it creates a lower low, a low that is lower than the previous low. You can see this low here, we will have the wick of this candlestick, you see is lower than the this particular one right here. So it creates a lower low, then gets back here, and it has created another lower low, this low which is lower than this. So once you, if you can be noticing trend lines, you can be using trend lines, and like waiting for the third touch, because you can only first join, you can only draw trend lines after when you have good points to join. Then you wait for the market to come back the third time. So if you are fortunate enough to be here to see when the market was here, then you enter the market, you got a good entry at this point, guys. Then you can catch multiple spikes till this point, see where the market stopped. But this is nearly maybe I won't say impossible, because personally I do not hold long trades. Maybe there are those who can hold long trades, because this will take more than how many days. Look at from here, how many days would this be? This is the daily time frame, so that is more money, excess money, guys. All right, so meanwhile, since I do not trade on the higher on this daily time frame, let's go down to the 4 hourly time frame to see this current structure and the direction of the market on that time frame. So go to the 4 hourly time frame, and on the 4 hourly time frame, you can see the levels we marked previously. They are very clearly presented right here on the 4 hourly time frame. So but what I would do, want to zoom out to see if I can find a trend to see the direction of the market on the 4 hourly time frame, because most times the direction you see on the higher time frame might just be limited to the higher time frame. But especially if you're not a swing trader, you might not need to be depending on the higher time frame direction. You might need to go to a lower time frame to see the current direction of the market on that time frame, so you can trade and get out of the market. All right, so right now I can see there was a kind of a trend. The downtrend is very visible here too. Let's put the trend line, guys. See the trend line. Oh man, let me put this properly. Let me take off this particular trend line, then join this one properly. All right, so you can see the movement of the market here, that the same thing I was explaining on the daily time frame. Now this is the 4 hourly time frame. This is another trend. The market formed downtrend. Each time the market started and got to this trend line, you can see it was selling. And now what is happening currently is that the market has given, there's a third touch on this trend line right now, and the market is selling. Now when there was a second touch, you can see the market sold, spiked down till it got below this previous low that was formed there. Now the market has gotten back to this trend line, and you can see it's now selling. What are we expecting to happen here in the market now? We are expecting the market to sell below this particular level here. Maybe I should use something to mark out this level. We expect the market to sell below this level, guys. We expect the market to sell below this level, because this is the third touch, and this on the 4 hourly time frame. So we expect the market to sell below this level before it to think of maybe reversing to the upside, guys. So if you were on the chart, you're fortunate enough to find this opportunity, guys, you'll be catching multiple spikes. Mind you, this is for 4 hourly time frame, so you can imagine how much you would have made if you found this opportunity, guys. So the best thing is just to be trying to join trend lines, guys. Join trend lines and mark out key levels. Wait for market to get, if the market is actually, make sure that the market is actually trending to a particular direction. If you are able to catch the market when it is trending, moving to a particular direction, know that the next target, your target should be the next swing high or the swing low. Like for now, our target should be this particular swing low here, because we expect the market to even go below this swing low. So if you are entering the market, you should be expecting to set your target here, and that is excess money, guys. Mind you, we are on the 4 hourly time frame. We're on the 4 hourly time frame. So if we go to the daily 1 hourly time frame, man, you cannot enter your trade. Personally, I don't get my entry on the 4 hourly time frame. It's too high. So most times I go to the 15 minutes time frame, so to get a more refined entry, because if I zoom in, you will see a very large candlestick body here. You see, that gave a bearish engulfing candlestick pattern, you see, which is a confirmation the market is going to sell. And I cannot enter a trade after the close of this bearish engulfing candlestick pattern is too large on the 4-hourly time frame. So my stop loss will be too much, you know. So the best thing is to go down to a lower time frame and find an entry. And the entry, you see that the stop loss will be a little bit bearable, won't be that much. All right, so I'll go down to the 1-hourly time frame first of all to see what is happening there. So you can see the market is still selling down. We can also have some, we can see that we still have some other key levels here on this 1-hourly time frame. I can duplicate this line and place here because there is a key level right here, guys. There's a key level around here. Then I would want to change this color to something maybe like this color right here. All right, so you can see there's a key level right there. Market has been buying and selling on getting to this level. So now the market has broken below that level. We expect a retest on that zone. Market might come back to retest on that zone. Then after a proper retest, it will continue selling to the downside. That is what I predict. That's my prediction, guys. That's my prediction. The market would want to come back to retest this particular zone that has been broken. After retesting it, then it will sell massively to the downside, to this our target area, to this our target area, guys. So if the market can come back to retest this zone, then you get a good entry. Let's say the market comes to retest here and you get a good entry, guys. Let's excuse me, let's say you enter here with the losses of 3.0. Then, guys, imagine what your TP would be. This over $200. If you're targeting here, this is just $200. Or if you can hold it down to this level here, then you make over $300 in profit, guys. You make over $300 in profit, guys, for a single trade and a single position if you can hold, guys. So there are very high chances of making some good money and catching multiple spikes if you're able to do a good top-down analysis, and if you're able to identify structures and trends and levels in the market. It will help you a whole lot, you know. Like right now, I expect the market to maybe come down to somewhere here before thinking of reversing, somewhere around this level before thinking of reversing to retest this zone, then selling massively to the downside. And if it does so, then it will be giving this a kind of a head and shoulders pattern that will confirm the market is going to sell massively, guys. So that's just my prediction. And if you go to a 15-minute time frame, it will help you to get a more refined entry. It will help you to get a more refined entry, just like what happened here on the 1-hourly time frame. Remember when I told you guys that if you were to enter the trade on the 4-hourly time frame, then I guess this would have been our entry point. This would have been our entry. But for the fact that we are on a 1-hourly time frame, look at where we would have entered, and it's still big, you know. It's still big, no doubt. But if we go to a 15-minute time frame, you see that the entry would be a little more refined. Be a little more refined, and you enter it with peace of mind, guys. You enter with peace of mind. Look at our normal strategy is even evident here, right here. You can see that the market on approaching this particular level. Sorry, let me get that arrow line too, so I can explain our strategy here. Apart from this stuff, you can see that the market was given a kind of corrective impulse to on approaching this trend line. Then it made a little fake out, then came back and retested this trend line. So if you are on the 15-minute time frame, this would be more like a sniper entry, because there's a retest on this trend line. Then for the fact that market has been selling here, then you enter your trade and make some good money, guys. You can see. So it's always better to go down to a lower time frame to get a refined entry. You see, if you want to enter the market on a 4-hourly time frame, then your stop loss will be too much. But here on the 15-minute time frame, you can see if at all we want to put a stop loss, should be just above this particular high here, this fake out here. So that is it, guys. With this approach, you can catch multiple spikes in the market. What are you actually looking for in the market? You are looking for a kind of a trend. You notice that the market is trending, then wait for the market to get to maybe the third touch. Once the market has given two touches, join it, has given you two swing highs or swing lows, try to join a trend line, then wait for the market to get there again to give a third touch. On getting to the third touch, on having the third touch, you go down to a lower time frame and refine your entry, enter your trade, and target the next swing low or next swing high, depending on the direction of the market at that point. Guys, you'll be catching big moves with this particular strategy. You'll be catching some big moves in with that strategy, guys. Like now, from what we are seeing on the 15 minutes time frame, I can decide to draw a trend line like this to see, because I can see something, guys. This is a swing point here, and this is a swing point here. Market is already here, you can see. So there is a chance market may want to reverse at this point, because the lower you go on the time frame, the more clearer the market is. You can see now it has given a third touch right here now. There's a chance that it might want to reverse. There's a chance that it might want to reverse. It might want to reverse here to retest this particular zone that is very close to it. It might want to come back to retest this particular how do we call it, this zone that is very close to it, then continue selling to the downside. You can decide to do that, or you can break below it, come back to retest this level, then sell to the downside. So it's just to, you just need to watch out. Watch out. If it gives you a confirmation it's going to buy, just be careful because of this resistance, this support turn resistance that is here. So you just have to watch out, guys. The more you practice this thing, the more you get better at it, and you're making some good money every day, guys, with this strategy. So that's just it. Please take note of this video. If you don't understand this thing, watch it, rewatch it. You don't need to watch once. You can watch it as many times as you want. It's available here on this channel. Watch and understand it, then try to apply it. Practice this thing on a demo account first before going to your real account. Learn to catch big moves. It's not about catching one spikes or scalping the market for 5 candlesticks and then you run out of the market. You just need a single trade like this, just single trade in a day, and you make all the money you would have made trying to pick on 1 candlesticks. So that is it. Then there's a link in the description of this video for those who are interested in my one-on-one mentorship. You go to that link, it will take you to my Telegram channel where I post information and sometimes high probability setups on that channel, and also where I post news about my some events we usually do, like free trainings and other stuff. So you can join that Telegram channel to get updated on whatever we want to do anytime soon, because I am planning on holding a free training for you guys again. And also in that Telegram channel you will find my direct contact. Please, you get my direct contact, then you contact me for your mentorship training. I do not want to put my direct contact here on WhatsApp, on this YouTube, to avoid scammers trying to manipulate it. So go there, contact me, then I'll be able to help you once we come to terms with the mentorship training. And you must be ready to be mentored before you contact me, guys. I'm not ready to teach anybody who is not serious about learning these things. You must be ready, guys. So like this video, share it, and also comment. Just let me know, air out your view about this strategy, and I'll see how I can help us better so that we can make some good money this year, guys. All right, to my next video. Peace out.